Good evening. Hi, everyone. Can you guys hear me? We just need a couple of checks to make sure it's all working correctly first.
Hello, I can hear you. Paulina here.
Oh, hi, Paulina. I was like, who's that talking? It's
Let
you.
me just check.
Awesome, awesome. Hey, guys, let's just double check quickly if we've got chat bar working. So at the bottom of your screen, you would see chat bar. Can you just click on the chat and just send us a couple of messages to make sure that we know it's working? That would be awesome. Cool. I don't see any chats coming through. Paulina, can you see anyone chatting?
I think I saw something. Oh,
Don't-
no.
No? Okay, Fazilat got her hand up. Is it not working for you guys? Let me just double check.
Oh, I just see the captions. That's what I saw was chat. It's
Oh,
captions.
there we go. There we go. Try again, guys. Try again, please. I've allowed you. It's funny, I allowed at the beginning of the webinar, but then I have to allow again. That's weird. Can you guys try again, please? Just send us a message, say hello. That would be awesome. Yay. Thank you, Diana. Awesome. Cool. Yes, it's working. Woohoo. Awesome. Good job. All right. While we're just waiting a couple of minutes for a few more people to join in, feel free to share this link as well with anyone that you think is on the home buying journey. That would be great. The more people understand the steps, the better for the society. Paulina, can you hear me okay?
Yes.
Okay. Your voice
just
is a
also-
little bit funny, but I think
Is that better now?
yeah, it's a bit better now.
Better.
Yeah.
Just trying to fix my
Beautiful.
camera.
Oh, good. Oh, good. All right. Awesome. Well, thank you guys so much for coming in tonight. I am excited. I haven't done webinar in English, I think, for a few months now, so I'll be a little bit rusty, maybe not. We'll see how it goes tonight. Hopefully you're all keeping warm. See, I still got my jacket on, but I do have a heater going. So sometimes during the webinar, I hope to take my jacket off. So stay tuned. Paulina, how are you feeling today? How's Auckland?
Good. It's cold after the holiday. So we were in Australia. It was a bit warmer.
Oh,
coast.
can
Yeah.
imagine. It'll be much warmer. So, we will kick off into the presentation shortly, and I'll introduce you guys to Paulina. This is a series of 4 webinars that Paulina and I are doing together. The next few are coming
Three.
up.
I think it is three,
3?
isn't it?
Yes, 3 with you.
3.
Yes, yes. But it's webinar 4, so there will be another one that I'll do
Yes.
extra. Yes, so
Right.
keep your eye out on the emails. There will be different topics each time, and we'll get more and more complex. So this one is more of an overview, overhaul, if you are looking to buy your first home in New Zealand. So without further ado, let's go. Just want to make sure you guys see my screen. Can you see my screen?
I can.
Awesome. Brilliant. Fantastic. So, navigating the journey of first home buyers in New Zealand. I put this little guide together for you guys. So we'll go through the steps and identify what you need to know. But first, let me introduce you to Paulina. Paulina is a founder and a director of PK Law in Auckland. She has spent over 8 years working in specialist private client law firms. And she has amazing experience in trust, estates, relationship property law. So if you guys have anything tricky, I'm sure Paulina has seen it all so far and has helped a lot of different clients to navigate. So today we're going to talk about property. Now, anything we say today is not a financial advice or legal advice. So if you need anything, specific to you, please come to us separately. So that's me, as you know. I've written books, I run different webinars, I also have my own podcast. So if you don't know about it, please sign up to the podcast. It's free, it's across Spotify, YouTube, and different various channels. So if you've got any questions, come to me or listen to the Home Loan Hub. So what are we going to talk about? We're going to talk about how you can understand the New Zealand market. We're going to talk about what you need to do to prepare for it, and then different points of life that you need to understand when it comes to first home buying. Now, something that people don't also understand is what happens when you go from renting to home ownership. And we're going to touch on some of those tips for you as well. So what do you need to understand about the New Zealand property market? At the moment, it's the best possible time to buy. Interest rates are at their lowest. And the property prices are also seem to be in the lowest mark as well. Anyone that I know that has bought a property a couple of years ago, they have lost a little bit of money on their property now. But look, if you don't have to sell, the property market usually recovers. But if you are in a position to buy something right now, now is definitely the best time to buy. So as we know, the property market is different across New Zealand. I believe tonight we have some people from Kapiti, we might have someone from Auckland, we might have people from all over New Zealand. So what happens in your region might be slightly different to the other regions. I understand Auckland, open homes are beaming with people again, houses sell really fast. So versus, like Lower Hutt, for instance, is still a little bit longer. Properties tend to sit a little bit longer. So it really depends which region you're in. And that's why it's very, very important that you have to talk to mortgage advisors, to real estate agents in your area. Because they will understand the market. The benefit of us, for instance, our firm now is so big that we deal with pretty much anyone across New Zealand, from Auckland to Invercargill. So we see a lot of different trends across different markets. Now, let's dive into a little bit of Paulina's favorite subject, property types. We get asked that a lot. So when you're a first home buyer, you have no idea what you're buying, right? You're looking at the property, it's a building with some windows and a roof. However, land titles might be different. We've got standalone houses. Paulina, do you want to talk about standalone houses quickly and what a freehold title may mean? Just really, very briefly.
Basically, freehold title is, in simple words, the best property, I guess, you can get. Being a house that is not restricted, has no covenants in terms of what you can do with it. For example, no one can tell you that you can't paint it a specific color. Unless you buy it in a very regulated development that might still have some sort of covenants in their development, but in most cases, there won't be any restrictions. So it's valued highly. It's most expensive land. It's freehold. You can do whatever you want with it, subject to only a few regulations, obviously government regulations.
Cool. Thank you. So your first option, if you're a first home buyer, you don't know anything about houses, if you're looking at a house, and the agent says to you, it's a freehold title, standalone title. They might use all sorts of different words. I tried to simplify for you guys in this presentation, and I broke it down into building types versus titles, because titles would always get people confused. But if you are seeing a standalone house on its own title, that's your preference. That's your preferred choice to buy. Townhouses. Now, townhouses, not always, but sometimes they could be on, and same with the houses, they could be on cross lease title. Paulina, what is cross lease title?
Cross lease title, basically, it's a title where there's several properties on the same title and they share certain rules. The rules being that you basically have to seek consent of your neighbors who belong to that same title. as to whether you can, remove this tree or change their wall or paint your house or do renovations, particularly outside renovations that affect the other owners. So yeah, it's still it's a good way to get into the market if your budget is tight. So they still good properties, valuable properties, but they just it's not freehold. So yeah, you have to be prepared that you will have to ask for permission before you want to do something.
Yeah.
And I probably should say that there is a way to convert it into freehold if you do want to, and if everybody agrees.
Cool. A bit costly. You have to go through the council,
Yeah.
council permissions, approvals, etc., to get it done, but it is possible.
I was going
Now,
to mention, sorry, one thing. The townhouses
Yes.
obviously can be freehold. Am I right?
Yes,
A lot of
yes.
houses are freehold as well.
Yeah. So a lot of
Yeah.
townhouses also
Yeah.
freehold. Apartments. That's an interesting one. I often get asked about apartments because they appeal to people that may not have, they don't have children, maybe. They like urban living. They want to stay in the middle of town, don't commute. They don't need the car for it. And usually apartments are more affordable, but it comes with a little bit of but. Paulina, what do we think of apartments?
I love apartments. I still love apartments, but yes, there is body corporate, right? So body corporate, unit title, that means again, it's subject to rules. You share common zones. So there are rules about those, and then there is a budget. So all owners have to obviously pay into body corporate. There's a long-term budget, a short-term budget, and there's a body corporate who manages it, the committee that gets chosen, voted on. But essentially, yeah, you might not like the decision that the body corporate or something the body corporate has decided to do, and you would not have no say if you outvoted. And if it's something like we've seen leaky building or some problem with the apartment building, of course, everybody would have to chip in and pay for that. And if it's, say, an apartment where you're on the top floor or you're one more affected, you might have to pay more than others. So, yeah. But most new builds, I'd say, don't have a lot of those issues these days, but you still never know.
They learned from 90s and 2000s.
And obviously,
mistakes.
yeah, and obviously, body corporate ranges, right? The fees, depending on the building, they can be very high, very
Yeah.
high.
So
Yeah.
something to budget for if you're looking to buy apartment. The banks usually, are very careful with apartment lending. And if you want to buy an apartment, often they might ask for 20 to 30 to 40%. And some apartments they will not even lend against at all. Apartments also different in sizes. If there is a certain size of the apartment, the bank will also not take it. So you just have to be conscious of that. And also when it comes to resale, apartments tend to hang around longer for resale. It's harder to sell them. And also they don't go up in value as much as a standalone house will or the townhouse. Apartments tend to just stay a little bit longer. Now, new builds. New builds is an interesting topic. A lot of people that are looking for a fresher house with better, energy efficiency, etc., they might turn to new builds, and there are a couple of options. You either buy the land and build it and pay as you go, or you could do turnkey, and often you just pay down 5 or 10% deposit and then you pay the rest at the end. And often new builds would be on a freehold title as well. But these are your available options. Now, what do you got to watch out for? So what do you got to really watch out for as a first-time buyer is watch the market carefully. As I was mentioning in the beginning of this webinar, we are in a prime time, but if the property prices increase even by 5%, you will find it hard to save that 5% within that short period of time. So even if you have 5 to 10% deposit, there are opportunities for you to buy a house. So don't wait until the property prices go up. Get in now, get the pre-approval, get it going. We've seen a shortage of housing supply in certain areas of New Zealand. Certain areas of New Zealand have oversupplied, like Christchurch, for instance. They've built way too many after the earthquake. But then there are other areas of New Zealand where there is not enough supply. So again, depends where you are in New Zealand, different things will apply to you. And as usual, it's always about the investors. They're making it hard for first-time buyers because investors are usually pre-approved, usually have the cash in, and they just go in and boldly buy it. So just watch out for those things. Again, if you're a first-time buyer thinking to buy, get in. Don't think too much. So what can you control? Obviously, you can't control the market. You can't control the interest rates, but what can you control? Let's have a look. I would highly recommend to start by addressing your current situation. So look into your own budget. Look into your own savings. Start saving. Make a plan. And this is where financial advisor comes in very, very handy because we sit down with you. We talk about your current situation. What are you doing with your KiwiSaver? What are you doing with your extra money that you get in? Have you looked at any way you can save extra money? For instance, by paying off certain credit cards or afterpay facilities. Maybe pick up some side hustles. So the more you can earn, the better your application will look. The more deposit you have, the better application will look. But in order to get there, you need to talk to someone about it. Don't try to do it alone. This is where we come in and we help you to position your application for the best chance of approval. All right. So don't be afraid. And it's better to do it now than fall in love with the house and come to us and we can't help you because you're not ready. So often we work with clients that take 6 months, 12 months, 2 years, but we work with them through all that process. And sometimes people just have to pay off their loans and then come back to us. But we make a plan with them. And in my team, I have now over 4 advisors that are able to hold your hand and take you through those steps. So don't be scared to reach out. Now, let's talk quickly about what does the government do for our first-home buyers. We still got the Kayanga Ora program. We used to have a grant. The government had a grant for the first-home buyers, and that's been closed. The Kayanga Ora helps you to get a pre-approval through certain providers, but it is income capped. So if you're earning more than $95,000 and you're buying on your own, you'll be outside of that program. Not eligible. Or if you've got over 155,000 for a couple or a person with dependents, again, not eligible. But if you tick some boxes, you could be eligible, and there's some really good rates under that program. KiwiSaver is still going. The government has reduced their contribution again this year with their recent budget cuts, but it's still going, and highly recommend if you are putting money aside to increase your KiwiSaver contributions as well, because that will help you to get on the ladder faster. Now, a couple of things you guys really have to watch out for when you buy a house is around calculating ongoing home ownership costs. Mortgage repayments are something we sit down and calculate with you. There are various calculators online, but what we normally say is go with the worst case scenario. Like try to plug in 6%, 6.5%, because you don't want to plug in 4% and be happy that, oh, my repayments are going to be very low. And then by the time you're ready to buy, the interest rate's gone up again. So always budget for the worst case scenario. There is also insurances and rates. As a first-time buyer, you have to be aware of insurances and rates. So rates, before you buy a house, you can look it up on the council website. So that will give you information, how much is the property rates are per year. And insurance, again, very easy. You can go online, get a quote for it. So normally I say to people, try to budget at least $200 to $300 a fortnight for those expenses. Could be more in certain areas. Something people don't also put in their budget is regular maintenance. They forget, because when they're renting, they don't have to do anything to the house. But when you own a house, you are responsible for all those costs. All right. So just keep that in mind in your budget. So what happens through the purchasing process? Let's have a look. So first you need to really start looking. Well, ideally you've come to me first already. You've got an approval and now you're looking for a property. So you start searching for a property, then you go and visit an open home. And then what we normally ask you to do after this, after you've done all the steps, is to come to me, show me what property you want to buy, And then at the same time is talk to your lawyer. So this is where Paulina's skills come in, or someone like Paulina, Paulina or Paulina's sidekick, where we help you to make an offer. And then, at some point there might be some negotiations, and you need to understand what you need to do to make the best offer to get the property at the best price. Because sometimes what people don't realize is when you make an offer, it's a conditional offer. So you can't come out of it, right? But if you put things like builder's report, for instance, and the builder's report came back really, really bad, like it needs, the roof needs painting, the bathroom needs replacing, etc., etc. You've got two options. You can either walk away from that property at that time, or you can negotiate the price down. So if the bank is happy with that builder's report and you're happy to negotiate the price down, fantastic. Or you can get the vendors to do those repairs. So all these things usually are discussed before you go unconditional. Now, people often ask, how do I make an offer? You have to sign a sales and purchase agreement, and this is how the offer is done. And then on the purchase day, on the settlement day, that's when the lawyers transfer the title. Paulina, do you want to mention anything here at all?
Yes, I guess just in terms of, if you want me to talk now about the process, or I guess the lawyer's involvement.
Yeah,
when does
that would be good.
the lawyer sort of gets involved into this process? Ideally, at the time you are making an offer, before you make the offer. So lawyers often receive offers that have already been signed and negotiated. But the best practice is that you get your lawyer to have a quick check before you sign an offer, even if it is conditional. I mean, you rely there on the real estate agent to put the correct clauses, ensure that the agreement is conditional. But real estate agents are not lawyers. They use standard clauses, but still, you do come across situations where something was done incorrectly and then you can't get out of it. For example, even things like due diligence clauses, there are different ways they can be worded. There can be a due diligence clause that doesn't give you 100% way out, 100% chance of way out, because it may be drafted in a way where it's not to benefit the buyer, but both parties. Similarly, with things like finance, I mean, perhaps not that much related in terms of when you draft an offer. So the buyers often pick finance condition as condition, and they don't understand. They think that they can just later say, well, I didn't like the property, and we're just going to tell that, the finance wasn't satisfied. But the other side, so the lawyer for the vendor, the seller, can legally has a right to request proof that your client, so the purchaser, did not get finance approval. So you can't just say that. So sometimes it may be appropriate not to include such a condition, specifically when you as a buyer are not sure how serious you are about this property. So in that case, you may be better off including a really wide due diligence clause, which would give you 100% way out of that should you not like it for some reason, not like the building report, or just change your mind. It often happens, you come to the property, you just love it, and then 2 days later you get clients, actually I thought about it, I don't like it that much anymore, and there's no legal reason, but they can rely on their wide due diligence clause. So again, there are little things that can make a big difference. In most cases, they might not matter, but then you get occasional cases where it's a big deal. So long story short, good to have a lawyer have a quick look at your offer before you make it. I know a lot of lawyers who wouldn't even charge for it, obviously, because a lot of buyers often don't go ahead into purchase because you might have 10 offers before you buy. I know a lot of lawyers who don't mind just having a quick look and wouldn't charge for it. And obviously would charge when you actually get a fully signed offer and they act for you.
Yeah. Exactly. Better be safe than sorry, especially if it's your first offer. Like once you do one or two, you get a bit of experience. But for the first one, like you really want to make sure that you put all the right clauses and all the right things. And again, this is just an overview of the webinar. You know, we can, I think, I'm sure if you and I pulled up a sales and purchase agreement, we could spend like an entire hour just going through the sales and purchase agreement.
Oh, yeah.
And things people should watch out for. But this is, this is more of an overview of what to watch out. If you are planning to make an offer, contact the lawyer, and then we go from there. Perfect. So let's have a look at common challenges that we usually have and we've seen. One of them is if you've got a pre-approval for your finance, especially right now, honestly, guys, I can't stress this enough. The banks are taking forever. They're taking over 2 weeks in some cases to come back to us. So before you fall in love with the property, before you decide to make an offer, if you can come to us and, put a application forward for finance, that would be much, much better. That would be amazing. So definitely that's one of my main tips, get pre-approval. The other thing I usually recommend to people is look a little bit outside your area. For instance, I'm in Kapiti, Waikanae prices are crazy. Standard house, you're looking at 700K plus, and it's not even a newish house. It's like oldish property. But if you travel a little bit further up, especially if you're not tied up to schools or kindies or jobs, if you can travel a little bit up the road to Otaki or Levin, you can actually buy a brand new property for the same price. So sometimes location matters, and even if it's 20-minute extra drive, you might get a better house. Who knows? This is an interesting one. Sometimes, especially right now, I hear a lot where people go, oh, it's much faster to go to the bank because the bank can approve me within 1 hour. Why do I need a mortgage advisor? In the last few weeks, we had multiple clients come back to us from the bank. They got approved from the bank, but they come back to us because what they're finding is the bank is not providing them the support. The bank is not holding their hands through the process. They just give them approval and they say, sorry, we're not qualified to give you anything else. Just go find a property, come back to us when you find the property. That's it. And the bankers often work 9 to 5. They don't work on the weekends. Versus here we are, 8 o'clock on a Wednesday night, running a webinar. And that's what happens. A lot of mortgage advisors work above and beyond. We work weekends, we work late nights, we work round the clock to help you and give you that advice. So we're not just there to give you an approval and see you later. We actually look at the properties with you online. Like you could send us links, we'll look at them. We help you to make the right connections. We might refer to real estate agents, we might refer to lawyers, etc. So definitely consider your options. If speed is a factor, then mortgage advisor may not be the right person for you right now. Because, as I said, the banking side of mortgage broker units taking forever. But if you value the relationship you're building, because it's not just buy a house, see you later, it's buy a house, we're here through the years of your mortgage, we help you to pay it off faster by giving you different tips. So definitely, that would be one of my top tips. The other interesting thing that people sometimes don't do, and recently we had few of those cases where people don't look at the property thoroughly. Don't just rely on builder's report. Make sure you touch the walls. Make sure you pay attention to the, open the showers, open the taps, make sure everything is operating and nothing is flooding. Because when you just come to the open home, often it may feel a bit invasive. You're in someone's place, in someone's space. You don't want to be touching things. But if you're going to make it your home, you want to make sure you're not buying a lemon. And sometimes the builder's reports don't pick up on certain things. So, and if you buy that sort of house and if the issues arise, it may end up in a very costly battle to try to overcome something like that. The other thing I usually say is, have a look at the neighborhood, drive by outside of open home hours, have a look who the neighbors are. But apart from it, this is where LIM report comes into play. You read the LIM report, you see what future developments may be for that subdivision, etc. So be very careful with the property that you buy, because it's a big item ticket. It's not just a pair of jeans that you can return back to the store. Doesn't work like that. And once the vendor has sold the property and the settlement gone through, it means you've done your due diligence and you've ticked the boxes, and it's very, very hard to prove anything afterwards. Because I see a lot of those posts on those, Kiwi First Home Buyers page where people go, oh, I bought a house and now the paint is cracking. Can I go back to the vendors for this? No. Once you bought a house, that's it. You're responsible for it. If anything you want to address beforehand. Cool. So what happens after you bought the house? Oh, before I go further, do you want to add anything, Paulina, to what I've just discussed? No? You're good. Okay. All right. What happens after? This is a very interesting point. I haven't covered this fully enough yet before. So you guys are the first. This is when you transition from renting to owning. You really need to relook at your budget. I can't stress budget strong enough. For the last few webinars that I've been running, we always talk about the budgets. You need to make sure you've got enough money for mortgage repayments, for rates and insurances, and any other unexpected expenses. The reason I'm saying it, and also try to prepare for the worst case scenario, because over the last few years with a lot of job losses, redundancies, I had a few clients in very distressed situations. We don't want this to be happening to you. So make sure you've got a buffer, make sure you've got enough money to look after the property that you're buying. Sometimes people get very set in their ways when they're looking to buy a house, and they go, oh, I'm going to buy this house, and I said to them, look, it's got a leaking roof. What's the plan for that? Oh, I'll fix it later. No, guys, you need to be able to fix those things up front, especially things that require fixing right now. So don't delay, put money aside, have a budget going. And as I've just mentioned, it is your responsibility. There'll be no landlord coming in, helping you and saving you from it. You also need to make sure you've got insurances in place, because if you don't have the right insurance in place, if something happens to the house, then you can't claim it. And this is one of my favorites. I love helping people to get on the ladder, because what happens when they buy their first home is that over time, that house will continue to increase in value. That's why I believe in property so much. And when the properties do increase in value, what happens next is that you suddenly have equity and you can play with that equity. You can either, borrow money back to do some renovations. You can either start buying another property. You can build your portfolio. And again, this is where we work with you closely, because ideally you want to have at least 2 to 3 properties, because if you don't have 2 to 3 properties, then when you retire, even though you have a mortgage-free house, you still need money to pay for rates and insurances and to support your lifestyle. And we don't know what the pensions will be like in 10 to 20 to 50 years to 30 years time. So be prepared for the future. All right. And we'll also help with refinancing. So if you bought a house and in 3 years time, you're looking to refinance or do anything, again, this is where the mortgage advisor comes in. So what I'm going to do next is, if you've got any questions, we're going to pop them in the chat bar and we're going to come to you guys and open for the open discussion. But just to reassure you guys again, what you need to do as a first-time buyer is really understand the market, where you're sitting right now. And where you're sitting right now is the best time to buy. So go, 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 buy, buy, buy. If you can, get yourself approved, and then we go from there. Now, make sure you've got the right support system with you. So you need a trusted mortgage advisor. You need a trusted legal advisor. You need a real estate agent, someone that will be able to show you around houses and stuff. And with the right steps, you can get into your home ownership within 6 months. Like, I've seen people get into their home within a few weeks of meeting me. So if you can set yourself a goal within, next 6 months or before Christmas, look, perfect opportunity before Christmas. If you can get into a home, go for it. Absolutely possible. Awesome. So I'm going to stop sharing my screen. Enough of me talking. And if you've got any questions, shoot away. We're here for the next half an hour to help you guys out. Everyone's shy today, Paulina. You guys can send us private questions as well if you need to.
Okay, I'm muted.
Thank you. If you don't feel like sending questions in a thing. But there's also Q&A button at the bottom of your screens. You can also use that to ask a question. I hope this has been useful to you guys. I'm always conscious about not talking too much, not to get people fatigued. But this is a recorded presentation, so you should be able to go on YouTube afterwards and see it there. Oh man, I didn't hit record this webinar. No, it's on YouTube, but not on my cloud. Sorry. All right. Question. If we have not decided a lawyer, what should we do when providing an offer? Go, Paulina. If they don't have a lawyer, what can they do?
Okay. Well, you can choose a good real estate agent. I guess the first tip, who knows what they're doing. So they provide you with correct clauses. But the safest is probably I would say, to pick as many conditions as you can on the front page of the agreement. Definitely finance condition, definitely building report, definitely lien report. And solicitor approval as well. So there's a condition called solicitor approval. So that means your solicitor has to check the title and everything and make sure they're happy with it. It's a bit different to due diligence. So due diligence, again, you don't have to provide any reason at all. So that's the widest condition you can get in terms of you can get out of it for any reason if drafted correctly. Solicitor approval would still require solicitor to find an issue with the title. So it's also not that easy to get out of, but if you look well, you can always find a good reason, or try to anyway, try to raise it as an issue. So yeah, that would be the advice.
That's awesome. Thank you. And interestingly enough, we just had 2 questions come in that are very similar. Basically about how to make an offer if the price is not stated on the ad. So if they don't have that's
By
what
negotiation.
Yeah,
say by
it's really
negotiation.
interesting. I get this asked a lot, especially from my migrant community, because they used to, where they're from, they
Price.
like, if something is selling, it's usually got a price. When you're buying in New Zealand, it doesn't have a
Yeah.
price. It's like deadline or tender. So how do you know how much to offer?
I don't know if it's a question for me or for you. I guess from my perspective, I guess it's a judgment call, right? I mean, you look at the government valuation, CV. So that's, it's quite easy. It's easy to find. You can check with council. You can Google. There is websites like what is it? Home loan,
Homes.co.nz.
home.nz, and then the other one is something similar. Anyway, if you Google basically the address and the property value, it comes up with the range of value, which is indicative in terms, can indicate as to what is the range, and then you kind of just go from there. But then you look at the market, right, where the market's sitting at, because it can be way below. Government valuation can be way above, depending what year you're making the offer.
Yeah. So what I would normally suggest is your first point of call would be talk to the agent. Ask them, what do they think the vendors want? The agent will probably inflate it a little bit. So if, the agent says, oh, they want $600,000, then you go, okay, cool. I've been pre-approved for 550. Do you think they will accept 550? And then the agent might say, well, I don't know. You need to put an offer, and then I'll present it. And look, if they're saying I'll put an offer, it means that they're ready to negotiate. If the agent says no, it means the vendors have told him no, do not accept anything below 600. So sometimes it's just by talking to the agents and understanding a little bit of human behavior and talking and them in the way that if you already got pre-approval, don't open up all your cards, obviously. If you've been pre-approved for 700, don't tell them you've been pre-approved for 700 because they will squeeze 720 out of you. So try to always go down instead of up. And as you said, Paulina, the other way to look up the property values is really look up what's been selling around the area, look up homes.co.nz. It actually has really cool, colorful buttons for you. It's got pinks, I think reds for sold recently, and blue that are on the market at the moment, something like that. So there are ways to find out. And look, if you've offered too much, and if the bank will actually tell you. I've just had one recently today. This morning the bank emailed saying the client offered 570 for the property, but the property is validating at 540 on the bank's end. So there's a 30K discrepancy. And the only way to find out the price is for us to order registered valuation. And this is something for you to note. If you don't have 20% deposit, you're a first-home buyer, you do need registered valuation. And this is where another person will go out to the property, will do their own valuation of the property and give you a report that also goes to the bank. And then the bank will tell you, and then if the, let's say, report comes back at 550, but you offered 570, then it means you can ask the vendor to drop the price down. And if they don't have any other offers, they might as well drop the price down for you. So, yeah. Hold on. I'll just press the button. Don't talk. Hold on. There you go. I was supposed to do that in the beginning, but that's okay. Yeah. Awesome. So I hope that answered your question, guys. Please keep them coming. If there is any more questions. So the cost that you have to be aware of when buying a property. Let's go through that quickly. You need to be aware that you have solicitor cost. So that could range between $2,000 to $3,000, depends on complexity of your purchase. So ask solicitors upfront, how much it would cost. Normally, they will provide you with a letter of engagement and they will outline their costs. And as Paulina said, ask them if they will be able to have a look at 1 or 2 properties for free for you, just so you learn the ropes. So $2,000 to $2,500 for lawyers. Then we've got valuation. So you got to put aside about $1,000 to $1,500 for valuation. Depends on the region, depends on urgency. Valuation can be up to $1,500 or more. Then you also need builder's report for your own sake. The bank usually won't ask for builder's report, but for your own sake, you may want to. Again, keep in mind, another probably $500 to $800 to $1,000 for builder's report. Depends on how comprehensive it is. All right. So normally I say about $5,000, put aside $5,000 for those sort of expenses. So hopefully that helps. Awesome. Next question. We have a very quiet crowd today, Paulina. It's hard to correct them. But guys, what I've said in the beginning pretty much applies. I do have that podcast that Paulina also featured as a guest a few episodes ago. We've talked about, goodness, when did we record our episode? I feel like, oh, you're on mute. You're on mute.
It was June.
Oh my goodness.
Yeah, time has, yeah. And also the next two, okay, what are the wills? So next one we're doing is wills and relationship property.
Yes. So if you
So let me just keep on.
Yeah. So if you are so the next few webinars that we're running, I think, when is the next one? In 2 weeks' time.
2 weeks' time.
Okay. In 2 weeks' time, we're running the next one. And it's going to be all about wills. Or the relationship one first. I don't know. But if you don't have a will,
Yeah, we'll see. I'm just checking.
you should definitely come to that one, because that's very, very important to know all about wills. And then we're also doing the relationship law. So basically, if you are married or in a relationship, you haven't been together for 3 years yet, or already for 3 years, you need to know what happens when you separate. You need to know who gets what, etc., etc. So we're going to be covering all of that aspect as well.
Yeah, so just to clarify, so next one is on the basics of succession law and wills. So basically explaining, why you need a will, why it's important to have a will in New Zealand, and how the succession law works. And it's interaction with the relationship property law because it's connected. And then the last one, the third one, would be purely on relationship property law. So your property and your relationship property risk. So when you purchase a property, how to protect that from a potential claim by your partner, specifically when you are putting unequal deposits, or when one is buying, the other is not contributing at all or not contributing to the mortgage. But it's not just to do with real estate, it's to do with everything: your income, salary, your KiwiSaver, any other valuable assets you own. And a lot of people don't realize that they can easily become not just your assets anymore, but be shared with your partner. So yeah,
Nice.
I think two interesting topics. Yeah.
Yeah.
I mean,
No,
interesting for me, of course. Can talk about it all day and night.
lovely. Thank you, Paulina. Now we've got a final question coming in. Is any part of the purchasing costs can be covered by a bank? Yes, the banks do offer a bit of reward. It's called cashback. So we can get you some cashback from the bank. Depends on how much you're borrowing. And if you're first home buyer, often, and if you have 20% deposit, often they might give you $5,000. So that will cover a lot of your upfront costs that you will incur. So yep, we can get some money back for you guys. So just keep an eye out on the emails. There will be some invites coming through in the next few days, I believe, for the webinars. Paulina, do you have the dates ready for us? With what dates are we running? Sorry, I didn't prepare that.
I think it is the same. So Wednesday, the 6th of August is the next one.
In 3 weeks then.
And then no, it's in 2
Is it
weeks.
2 weeks? Oh my goodness. Is it August soon?
Yeah.
Holy
Yeah.
moly.
Yeah. So it's the last week of July, right? Well, almost, yeah.
Wow. Time flies when we're having fun.
Actually, so next week is the last. Yeah, so next Thursday is 31st. So anyway, yes, 6th of August, Wednesday, 8 p.m. And then the next one is on 20th of August, also Wednesday, same time.
Cool. Awesome. At least Paulina knows when we're doing what. That helps.
I have to prepare for those two.
Yeah, I've done my bit.
Yeah.
Awesome, guys. Thank you so much. And feel free, like when you get those emails, feel free to share with your friends. Anyone's welcome. It's all free. We're doing it for you. It's obviously a topic of interest for both of us to be sitting here on a Wednesday night at 8 o'clock at night talking about this thing. So we do love what we do and we do want to help you. If there are no more questions, final call for questions. But if there are no more questions, what we'll do is we'll wrap it up. And just as a reminder, again, please go and have a look at the podcast that I'm running. There's a lot of information there that we cover. There's a YouTube channel that I also record all those videos, and you can go back and have a look at other ones we've done if you've got any questions. But feel free to reach out anytime.
Mm-hmm.
Thank you. Oh, thank you. Thank you guys so much. Enjoy the rest of your evening. I hope this has been informative.